Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 9th through January 13th, where we'll talk about how we can make money trading in a year without a Santa Claus rally. So again, it doesn't look like we got our Santa Claus rally for 2022, and we'll talk about what does that mean in terms of the conditions in the market for 2023 for January and the rest of the year going forward, and how we can make money in the year without a Santa Claus rally. So thank you again for joining us for part one of our weekly trading game plan for the trading week of January 9th through January 13th, and we'll go ahead and get started. Thank you for joining us, DS Greg. Glad to see you in the live chat for our live stream today. Hope your New Year's going well. So here's our Google document with our notes for our part one of our weekly trading game plan. And you should be able to find a link. These are publicly accessible. You should be able to find a link to these notes in the description box below, and we store our notes for our weekly trading game plans in a publicly accessible folder on a Google Drive, and you should also be able to find the link to this Google Drive folder, and either you can access previous notes as well as these in that public Google Drive folder. Our notes contain links to bonus videos, all the tools we use for our market analysis, etc. So in part one, again, we'll look at how the markets performed the past week, and we'll talk about strategies, trading ideas, etc. We'll do our market analysis, and then tomorrow, again at 10 a.m. Eastern time, we'll come back for part two, and we'll select our individual stocks, ETFs, etc. To put on our various watch lists for trading next week, January 9th through the 13th. Welcome also, Alan Krentz. Glad to see you. Hope you're doing well. So again, let's talk about how do we make money trading in the year without a Santa Claus rally. I've got several references that are pertinent to this discussion, and we'll talk about these again at the end of the video and how to strategize, how do we make money trading in this year without a Santa Claus rally. We just released one on the January effect and what that is, and we would recommend that you view that video to understand the January effect. How does January perform relative to other months during the year, etc. So again, we have a whole video we just released on what does that mean and how does that indicate the rest of the January month. We talked about the Santa Claus rally. What is it? How often does it occur? What does that mean if we don't get one? Also, we've talked about the wash sale rule that's still in effect, for the month of January, depending on when people sold to their tax loss harvesting in December. There's a 28 to 30-day window where they can't buy back the essentially equivalent stock. So again, we're kind of still in that window where there may be some people wanting to buy things back later in the month that they sold late in December. And we'll also talk again about our New Year's trading resolution. So all these are separate videos. You can get more information on the details of those via the links in our notes. Welcome also, Ricky Khan. Glad to see you. Thank you for joining us. And just a reminder again, for your New Year's, hopefully you're setting New Year's trading resolutions, and we encourage everyone to share their New Year's resolutions in our free Discord. Again, our Discord's free to join. You can find a link to our Discord in the description box below, and we encourage everyone to share your New Year's trading resolutions with our BeachBum trading community so that they can help support you in achieving your New Year's trading resolutions, and we can support you as well. So we'll start to take a look at how the markets performed. Why didn't we get our Santa Claus rally, or how did the market perform on Friday? So on the FinBiz homepage, we can see although the markets were down earlier in the week, again, we didn't get our first two trading days of the year Santa Claus rally, but on Friday we got a nice pop in all of the indices based on some of the economic data that we'll discuss in the near future. Welcome the blind trader. Thank you also for joining us. So we see all the markets ended up 2% or better on Friday. See more advancers than decliners by about 80-20. some new highs, 55% new highs. We've now got 55% above their 50-day moving average, but we're still a majority, 61%, almost 62% below their 200-day. And we can see earlier in the day, this was showing a bullish indicator. And then at the very last market on close, we got a last minute little dip and it showed bearish. But really overall, Friday was a very bullish day. You see everything was almost green. Almost everything was green. The FANG stocks, recovered, outperformed on Friday. And again, we'll talk again about the sector rotation, in and out of the various sectors and how we can make money trading that sector rotation. So you see some of the news. We'll talk about, the market versus the Fed. And we talked about this a couple weeks ago. And this ongoing fight between the market and the Fed. The market's obsessed with the Fed's inflation fight. Some bankruptcies. We talked about zombie companies. We released our video on zombie companies this week as well. Core inflation in Europe hits a record. So then we see the futures. Oil has been testing the $80 mark and getting rejected off the $80 mark and bouncing back down about 75, dipped a little below 75. So between 70, 75, 70, and 80 is the current range. We saw some strange behavior in natural gas. It really dropped off a cliff. Even though the inventory data was much more negative than expected, and we'll talk about this when we get to the futures as well, but people are attributing the warmer than expected winter weather right now to the decline in natural gas. And again, we'll talk about our strategies on how we're playing that going forward. Gold has had a nice run. All the precious metals had a nice run. Gold's running up. It held up its support above 1842, which was a mark that people were commenting on. So again, gold and silver had a nice run on Friday, as did all the indices. We also saw, decline in all the treasury yields. Again, this is a risk-on type of move based on in my humble opinion, over-exuberance based on some of the economic data that we got. And we see the dollar weakened, and therefore the other currencies, euros, British pound, etc., went up. So again, just a quick reminder, all of this is not financial advice. We're not financial advisors. These are my opinions only, as is true about all of our videos. And this is for educational and entertainment, hopefully some entertainment purposes only. So now let's look at each of the indices and let's see what happened to our Santa Claus Rally last year. So again, we can see I go to the SPY, the last several days, we really didn't get any kind of Santa Claus Rally this year. So normally the Santa Claus Rally is the last week of December and the first 2 trading days of January, and we really didn't see that this year. No real rally. Everything was pretty choppy flat until we got to Friday. And then again, we got this overly exuberant reaction to some of the economics, some of the jobless claims, some of the PMI data on Friday. So if we zoom out, we can see here we're still sitting in this channel, still got heavy resistance around 410 on the SPY. It's still in a downwardly trending channel. If we zoom out to the weekly, again, we see, we're clearly in a descending bearish market, lower highs, lower lows. And right now we're kind of just sitting, hovering in the middle around the 20-day moving average, well below the 50 or 20-week, below the 50, but above the 200. Welcome, Walter Lyons. Glad to see you. Thank you for joining us. We'll look at the NASDAQ. So just to kind of go back quickly to the SPY, we got kind of a hammer candle on Friday, which tends to be bullish. So we might get a short rally, but again, we're still in a bear market, still making lower highs, lower lows. So that's what we would expect going forward. NASDAQ, again, same thing, pretty bearish, sitting below its 20 period, 20 week moving average, same type of thing. We've got a very narrow hammer on the NASDAQ. Yeah. Looks like that 260 level is providing pretty decent support, so we'll have to see if that continues to hold or if it breaks down to a new low in the near future. Look at the IWM, the Russell. Well, let's look at the Dow first, DIA. Dow has been outperforming the other indices. It's getting good support from that 50 period, 50-week moving average. So again, the Dow is much more bullish than the S&P or the NASDAQ. And again, that 50-week moving average seems to be providing good support. So we'll see if it can make a higher high or if it's range bound or if it breaks down below that moving average again. Now we can look at the Russell, IWM. It's been just kind of chopping sideways. Looks like that 20 period moving average is providing, at this point, it's a little bit of a resistance. But again, the Russell looks pretty much sideways at this point, in my humble opinion. Look at the VIX. We got a little bit of a pop in the VIX at the beginning of the week. Again, after these 3-day holiday weekends, we tend to get a pop in the VIX. There's also some negative reaction to some of the economic data earlier in the week, and we'll talk about that, to the Fed notes, some of the Fed president's talks, but it really didn't pop that high. That was on the 22nd, so we got a little pop on the 4th. Again, it only made it to 24 or so, and now it's retracing, reverting down to the mean. Again, we'll talk about a strategy with playing the VIX, probably more tomorrow, but maybe a little today, going into both CPI data later next week and going into the Fed's next interest rate decision at the end of January. So now we'll also look at some of the groups, industry sectors. Again, on Friday, we see this run in technology. Again, sector rotation into technology, recovery in basic materials. Again, gold, silver, etc. had a nice run. Out of energy to some degree, out of healthcare to some degree. For the week, again, basic materials has had a recovery. We saw last week, energy, basic materials are kind of a lot of profit taking those areas. Financials got a little bit of a boost for the week. And again, for the week, though, energy was still negative. So it's been negative most of the year. A lot of profit taking. Energy was an outperformer from last year. And so that's the tendency now that we're in the new year. As you see the underperformers from last year, people make the assumption that those are going to be the outperformers going into the next year, and vice versa. The outperformers last year, like energy, it's assumed they're going to underperform going into this year. So you're going to see profit taking in those sectors. So again, for the month, though, technology, communication services still very negative, as well as cyclical. Look at some of the industries for Friday. Again, we had seen uranium had been beaten down some. We were looking for opportunities in uranium. You see it was the top performer on Friday. So again, these sector rotations, steel, copper, all your basic materials are very positive. Got some boost in some real estate. Let's see what the worst performance. Okay, diagnostics and research, some gaming. So not a lot of negative on the Friday. Again, basic materials, gold, silver were positive. Steel for the week, silver. And the worst performers were healthcare, solar. Again, we've talked, they rotate in and out of solar pretty rapidly. Welcome, Doug M. Thank you for joining us. Glad to see you as well. So again, as we've been talking for quite a while, one of the ways to make money trading in this year without a Santa Claus rally is to watch these sector rotations And when money starts to flow into one of these sectors, which tends to be the underperformer from the day or the week before, they'll start flowing money into that sector. When you see money start to flow in that sector, there's a short-term opportunity to make money trading as they rotate into that sector, and then take your profits when they start rotating out. So again, we've been talking about this and providing a number of tools to see these sector rotations for quite some time. And again, a good way to make money trading is to be aware of the sector rotation and take advantage of those sector rotations. Okay, let me grab a drink and we'll talk about the economic data from the past week. I'll bring up the investing.com calendar, and then I'll talk about some of the highlights that I observed from this data from last week. Okay, again, markets were closed on Monday in observance of New Year's. We hope that you all had a wonderful New Year's holiday weekend. We hope you took the opportunity to spend time, relax, rejuvenate, get ready for the new year. Hope everyone's doing well. So I didn't have anything particular from Tuesday. Then Wednesday, we got mortgage rates. Mortgage rates still going up. Housing market's still in a recession. We got ISM manufacturing employment, which was higher than expected, again, and job openings. So again, these were perceived as negative by the market because it says that the job market's still resilient. So again, the Fed can be more hawkish. Then later in the day, we got the Fed meeting minutes, and I got some excerpts out of the Fed meeting minutes I wanted to highlight and make sure people are taking note of these facts coming out of the minutes, because a lot of times it seems, we talked about the battle between the markets and the Fed, and the market is kind of ignoring some of these facts that, no members thought it would be appropriate to cut rates in 2023. So anybody talking about a pivot, that they're going to reduce rates in 2023, that is not what they're saying. They're saying no rate cuts in 2023, no pivot in 2023. So again, this exuberant reaction based on some kind of pivot in 2023, that's not what the Fed's saying. They're saying the labor market seem to be still very tight. So they're not worried about unemployment, which means, again, they can be very hawkish, very aggressive. Inflation is still unacceptably high. So they're saying we still have a lot of work to do to bring down inflation. So that means higher interest rate hikes. So again, all of these things says the Fed's going to continue to be very hawkish. So anybody talking about a pivot, a reduction in rates, again, is delusional relative to what the Fed is actually telling you. So officials said further rate increases would be necessary. Risk of inflation accelerating faster than anticipated. Key factor in chase. So again, it's what we've been saying for a long time, is they're going to continue to be hawkish. They need to kill inflation. Inflation not really coming down. The job market's still very resilient. So we should expect hawkish rate hikes going forward until they see inflation come down, or that's their primary objective. And as long as the labor market holds up, their secondary objective is not at risk. So again, we expect increasing rates. The next rate hike will be at the end of this month, and some people are talking 25 basis points, whatever. So they said in the minutes they need to go another 75 to 100 basis points. So is that going to be the next two meetings? Next three meetings? It doesn't matter so much. We know interest rates are going to be increasing, and we should position our portfolio to trade accordingly. Hey, Easy Mike, glad to see you. Thank you for joining us. Easy Mike is a someone I chat with on a regular basis in the Benzinga pre-market prep shows and live trading shows, and he's a great resource. I believe he does quite a bit of pairs trading, commodities trading. We talk energy quite a bit, so I'm glad to see you. Thank you for joining us. Maybe we can encourage Easy Mike to join us in our Discord, and you can find the link to our Discord in the description box below, and maybe share some of his great experience and knowledge in pairs trading and commodities and currencies. Also, tomorrow I'll share with you another ETF that Easy Mike was kind enough to point out for us for global market trading. So glad to see you. Thank you. So Thursday, we got these job cut data, again, a little less than expected. Again, and the ADP number was high, and the markets reacted negative to this. All this says, again, the job market's resilient. The layoffs are not really hitting the job market, hitting unemployment. Initial jobless claims is less than expected. So again, the market perceived that all as negative relative to the Fed being able to be more hawkish, raise interest rates more rapidly. So again, that is perceived to be negative by the market, even though it's better for the economy. Here's the natural gas storage data that I mentioned. It was a little less than expected in terms of negativity. So despite that, the natural gas price dropped off pretty steeply all week. We saw a little bit of attempt to recovery, but again, the trend was definitely down. And again, that's being attributed to warmer than expected weather. Welcome also the Blind Trader. Glad to see you as well. Holly in the Bay. Got a great group in the chat. Got a great community helping each other out. It's all very much appreciated. We also saw crude oil inventories a little bit higher than expected. And again, we'll see in the futures, the oil price seems to be bouncing down off of 80 and then finding support, in the low 70s. Part of that was the utilization. Refinery utilization was much lower than expected. So again, oil did pop on that number, but it does seem to be hitting significant resistance around the 80 level. So then we got the data on Friday, the jobless claims data, the PMI data, and the market reacted very exuberantly to this. Particularly the average hourly earnings was a little lower than expected. It grew less than expected. So people perceived that maybe the wage price spiral would not be an issue with the Fed interest rate decisions. There was a lot of discussion along those lines. But again, you saw in their comments on their meeting minutes that they still see the labor market being very tight, inflation's still, unacceptably high, etc., and unemployment's not an issue. So the unemployment rate actually went down. So again, the labor market is very resilient. The Fed can be aggressive, raise interest rates without fear of damaging the employment market. So, and then this ISM, so this is some inflation and recession-related data, PMI data, and it was a little bit lower than expected. So again, they're saying, possibly inflation at the front end of the supply chain might be coming down. And again, that all of these things gave this exuberance reaction to the market, and so they ran the market up on Friday. So again, this is contrary, and this is what we talked about, several weeks ago, this is the battle between the market and the Fed. Is the market doesn't want to believe that the Fed's going to be as hawkish as they're telling you they're going to be. So you have to, you've heard the adage, don't fight the Fed, don't fight the tape. So let me quickly spin through the calendar on investing.com. This is where I get this data. Again, just a reminder, as this data comes out, here's our free Discord. Again, you can find a link to our free Discord in the description box below. And as this data comes out, I tend to snapshot it and paste it in the Surf the Markets report channel in our Discord. So I'll put a snapshot of the graphic, also the textual data, and then we also have a feed from Market Watch Economy that'll give you a nice interpretation of that data that I find helpful. So again, join us in our free Discord. You can find the invite in the description box below, and I try to post that data as soon as possible. And again, I'm capturing it from this calendar in investing.com. So construction spending was actually better than expected. Mortgages, we talked about ISM, talked about a little bit higher than expected. We talked about all the jobs stuff. And we talked about jobless data. So now let's look at what we've got. Well, here's the Baker Hughes. This is kind of interesting too, is the Baker Hughes. So this is the oil rig counts going down. So that says they're actually pumping less. I would guess they're trying to keep the prices up. So as the oil prices decline below 80, now we're seeing producers are producing less. So that should keep a floor on the price, as well as this SPR. Biden stating they're going to refill the SPR at like 75 or less. So again, that's providing a floor, and that's why we're seeing that bouncing back and forth. Mondays tend to be pretty boring. Tuesday, get some wholesale inventory, crude, mortgages. Wednesdays, typical oil inventories. Core CPI. So Thursday is going to be the important day. We get continuing job claims and core CPI. And this is one of the measures, along with PCE, that the Fed looks at, as well as jobless claims data. So again, expect volatility depending on whether this data is better or worse than expected. Get your trading plans in place. Be ready. If it's better than expected, what are you going to do? If it's worse than expected, what are you going to do? And then Friday, we get sentiment data, not as significant, but yeah, Thursday is going to be the volatile day. And again, if this is better or worse than expected, expect the market to react significantly to that data. So again, 8:30 on Thursday. And I've got those reminders in our notes on Thursday. Sentiment data is on Friday. I hope that all helps. And then we've got the next Fed interest rate decision at the end of the month. So end of January, the next decision will be on February 1st. So again, we expect interest rate hikes. There'll be a lot of debate, whether it's 25, 50, 75. Again, it's going up is the main message you should take away. And position your portfolio and trade accordingly. Earnings, let's see what we've got coming up for earnings. So again, the lengthy calendar you can find here in investing.com. So WD-40, got started financials, some retail grocery. We're just starting in KB Home, so housing market. And again, the Fed wants to see housing prices coming down. It's a major indicator of inflation. So we'll see what these tell us. JP Morgan. So then we get the large healthcare, a large financial, a couple of financials. So JP Morgan, Bank of America, Wells Fargo. This will tell us financial industry on Friday. So if you're into anything in the financial industry, you probably want to listen to those. Airlines. So again, we're just getting started back in the earnings season. So this will get more busier as we go forward. So let's look at the market screen in Webull. And again, just a quick reminder, I use Webull for market analysis, due diligence. The majority of our trading we do in Webull. and they're still offering these 12 free stocks if you open and fund an account in Webull, and each of those free stocks is worth anywhere from $3,000 to $3,000. Again, I also like the 4 a.m. to 8 p.m. trading hours in Webull, as there's sometimes gap up, gap down opportunities at 4 a.m., and that's why I'm typically around at 4 a.m. or before to look for and take advantage of those opportunities. So wave and say hello if you're up around 4 a.m. Again, if you open an account, you get 2 free stocks worth $3,000 to $3,000. If you deposit any amount, now they're saying at least $100, then you get 10 more free stocks. So before it was any amount, now it's at least $100. But for that amount, you can get 10 more free stocks worth anywhere from $3,000 to $3,000. So, it's worth getting the free stocks. You can always cash them out if you don't want to use the platform. But again, it's our favorite trading platform. So this is the online browser version of Webull. I like to look at the market screen to get a nice overall picture of how the market performed. So I like this histogram. We can see a distribution of advancers, decliners. We see the vast majority of the advancers is a very small percentage advance. The long tail, so we had a very few that with a major decline, very few with a major advance. We see the inflows and outflows. This is a reversal from what we've seen in the past couple weeks. We actually see an inflow in the NYSE and an outflow in the NASDAQ. So even though we saw the NASDAQ pop up on Friday, the past couple weeks we've seen money flowing into the NASDAQ, and now we're continuing to see money flow out of the NASDAQ. So that's interesting. That may indicate that maybe the Dow is going to make a run up again. Again, my opinion. Again, another place you can see the earnings calendar in the near term. What's coming up shortly is in the market screen of Webull. You hit calendar earnings, and you can see, okay, before market open, BMO, who's reporting, after market close. Again, I like to use that for an upcoming earnings indicator. So let's look at best performing industries for the week. Educational, transport, passenger. Again, we're going to see almost everything green because of the run. So we see that major recovery in uranium. A couple we like, DNN, UROI. We've got UROI in our bullpen. You see it's run up now. Construction, home building, so again, almost everybody did well. Semiconductors not so well. Banking didn't do that great. So again, we'll want to hear their earnings this week. Metals mining did pretty good. Again, basic materials. Let's look at the ETFs. So up on the NASDAQ. Bull 3x on the S&P, up on the Dow. So everybody betting up. Not surprising. Up on the Dow. Up. Both up on the S&P. Up on the Euro. Small caps. Again, we've been talking about potential rotation into small and mid caps. We saw those were positive the past couple weeks. Europe positive, and we saw, China, the trend has been up on China lately. Industries, healthcare, not quite as positive. Everybody else looks pretty positive. So healthcare is the only one that didn't really participate in the run on Friday. Commodities, again, we've been talking about this for a while. There's been a sector rotation in and out of aluminum. Oil, gold, cotton, so pretty much all your commodities were recovering again with the dollar weakness. Any dollar-denominated commodities benefited from that. Inflation, all-weather inflation, and bonds. Yeah, and we saw an interesting, reduction in yield, increase in price in bonds, and we'll see that in the futures in a second. but we still have a severely inverted curve. That's again, all the currencies benefited from the dollar weakness. Okay. Checking the chat. I see comments on Easy Mike's talking about big bond buying on Friday. TLT. Yeah, we'll see TLT, TMF. We like TMF. Okay, let me grab a drink and we'll look at the futures and then we'll talk about strategies. So just another topic. Easy Mike's talking about bonds. Anybody that actually has experience with buying bonds directly, we have a bond channel in our Discord. That's an area I would like to look into more. I do not have experience with buying bonds directly. I probably won't, as I can make more money trading. But anyone with experience in this area, if they're willing and able to contribute your experience, your knowledge. Again, we have channels for different trading of different asset classes in our Discord, and I'd encourage anybody who has experience in those areas to share, including Forex, commodities, futures, etc. Not things I'm currently trading directly. So possibly if you're interested in those areas, we have channels for in our Discord to discuss those topics. So I hope that helps. Okay, let's look at the futures. So again, I've got videos on how to use this futures tab in more detail. I have this open, pretty much all the time. We can see a nice overview of all the futures. So again, we see that big pop. I know it's pretty much flat for the week, but a nice pop at the end of Friday. Again, all the indices are indicating a pop, but again, the trend is generally down. Russell, from here, showing it may have bottomed. Still got a ways to go to make a new high. Nikkei really fell off with the change in bond policies. Looked like it made a little bit of a recovery. Europe made a recovery. Here we see that downtrend in the VIX. We see a little bit of a pop, but again, the trend is down. Now, again, we'll talk about this in more detail tomorrow, again, on how I'm going to play this. But going into that CPI data on Thursday, we expect to increase volatility based on that. I'd like to see the VIX, get below 20 again, and then I'd go long UVXY. It'd be great if it would get there before the CPI data. If not, definitely before the next Fed interest rate, I'd like to get long the VIX, long volatility with UVXY going into the next Fed. Here again, we see the crude oil fell off, tested 80, fell off, bounced up a little bit, getting resistance at 75. We'll talk probably in more detail again tomorrow. Yeah, we'll talk about how I'm looking at playing this decrease in oil here. Here's the cascade in natural gas. So again, we see it pretty much fell off, even though, negative inventory. People keep saying the warmer than expected weather is the cause for this decline. Also, the LNG plant's not being online yet. I guess that Freeport's supposed to come back online in February. So there's potential of a pop there. Also, if we get a cold snap, that might cause a pop in natural gas. Now, just for everyone's information, we're pretty much neutral now in natural gas. We tend to play natural gas with boil, long, cold, short, KOLD short, and I have positions in both right now, and they're pretty much neutral. My strategy with this right now, given its decline, we've been in cold for a long time. I just added a position in Boyle. I was a little early, obviously, because I got it at a higher price. But again, since I'm essentially neutral, what I'm looking at doing is selling covered calls against them, depending on which one's going up on a given day. So if Boyle's going up, I'm going to sell covered calls against Boyle, buy them back when it goes down. If natural gas going down, I'll sell covered calls against coal, buy them back when natural gas pops up, and just keep going that until we get a trend and one of those positions is profitable. Then I'll sell that out and hold the other. So I hope that makes sense, and I hope that helps. See the nice run in gold. It's up, up in the 1800s, trending upward slowly. Silver got a nice, tweezer bottom there. We'll see if that turns back up again. Copper, big pop on China reopening and weakening dollar. Palladium's trending up. All the commodities pretty much. Lumber continues to decline, although we talked last week, it's still not relatively cheap. And we see this nice pop in the bonds, so TLT, TMF, etc. The 20 plus year guys got a price increase. Now, again, we've been talking for a long time that those yields, since the Fed's now talking they're going to be somewhere between 5 and 5.4%, it seems to be the consensus discussion. Those bond yields need to go up to compete with the Fed interest rate. So yields are going to have to go up. Price is going to come down at some point. Maybe not until the next Fed decision, but be prepared. The yields have to go up. Prices have to come down. So we saw the weakening dollar a little bit. Looks like it's pretty stable in the 103, 104 area. So, okay, let's talk about some strategies. Again, here are the links to our videos on Santa Claus Rally, how the wash sale works. Again, we're still in this window of 30 days since the sale, so please be aware of this. If you sold something for tax loss harvesting at the end of last year, please make sure you understand the wash sale rules so you don't invalidate your tax loss harvesting by buying essentially equivalent security within that window. Again, if you need specific tax advice, we're not tax attorneys, we're not lawyers, so we use Mark J. Kohler. That's who I would recommend refer you to for any specific tax related or legal related or retirement account related help that you may need. Again, that's who we use. So again, we just released the January effect. As you'll see in this video, January has a statistical tendency to be one of the better trading months, be an up month. You can again see the historical significance, the percent increase, the historical data behind that, the thesis behind that in this video. But again, January has a tendency historically to be a positive month. So even though we didn't get our Santa Claus rally, again, we should expect, again, it's a bear market, but we should expect January to be one of the better months. Now, another video I've got under construction right now talks about the January barometer, and it will explain in more detail what exactly that is. But essentially, this is the predictor. If we do have an up or down January, what does that mean in terms of the trading, the stock market performance for the rest of the year? Another interesting thing is I just started playing with this ChatGPT. And so what I asked ChatGPT is, how does the stock market perform in years without a Santa Claus rally? So again, I'll try to zoom this in a little bit. And I'll read it. It explains. This is kind of interesting. It first explains what a Santa Claus rally is, and then when it occurs, the last week of the year. Good mood. Why? Because they're in a good mood. Increased buying activity. And then it says there's no definite data on how the stock market performed in years without a Santa Claus rally, so it's not definitive. This is somewhat subjective, no agreed upon definition of what it constitutes a Santa Claus rally. It's worth noting the stock market is influenced, and then it says, influenced by a wide number of factors. Performance in a given year is likely to be influenced by many different factors beyond the presence or absence of a Santa Claus rally. So essentially it's saying that, it doesn't matter. That having a Santa Claus rally or not is not an indicator of whether the market will be bull, bear, up, down. Some of the factors contribute that impact stock market performance include economic conditions, corporate earnings, interest rates, and geopolitical events. So that's what we're looking at, right? Is what's the economic data tell us? What do earnings reports tell us? We know interest rates are going up. We also know we have a lot of geopolitical instability, and we could get, geopolitical event that would impact the markets more than the presence or absence of a Santa Claus rally. So again, trading in the year without a Santa Claus rally is the way we've been strategizing trading any other time, which is look at the data, earnings, what's going on, how interest rates are increasing. We have the potential to be in a recession. And so we strategize accordingly. So I hope that helps. And I'm going to be asking ChatGPT more questions. So far, it's interesting. So I won't go into bore you with my history and AI and chatbots and all that kind of stuff, but it's interesting, and I'll be playing with it to see if I can get some information out of it. So again, just a reminder, we'd love for you to share your New Year's trading resolutions. Trade them, share them in our Discord. We also have the Facebook group, so you can share them in either of those places. Again, let's help each other, our BeachBum trading community. Let's help all of our fellow BeachBum traders achieve their trading resolutions for this year and succeed in trading at all times. So that's our objective. That's why we're here. Just another quick strategy, and then I'll try to answer some questions if I missed anything. But just FYI, I'm rethinking my options trading strategies, due in part what appears to be the low probability that in the money options, whether they're calls, covered calls, or cash secured puts, are being exercised. My experience has thus far has been, even though I've got things that like a cash secured put that's far in the money, the person that bought it could have, assigned it to me and bought the stock a lot cheaper and made a profit. They're not exercising it, so that cash is being tied up. Same way with the covered call. When the price goes above that, I expect they're going to, take my stock and give me the profit. Well, they're not doing that, and I'm not able to put a stop in a retirement account underneath that stock because I have a covered call against it. And that's something we have another video talking about covered calls being, double-edged swords. So I'm rethinking these strategies based on that fact that it appears that it's a low probability of people actually exercising. I should put early. But if that's the case, then I need to rethink our strategies and our return on invested capital, our deployment of capital based on that fact. My erroneous assumption was that if somebody was significantly in the money, that they would exercise the option as it would be profitable, and that does not appear to be the case. Now, anybody else that has experience in these, more experience than I do in these regards, I started a discussion in our Discord, and I'd love to hear your experience with how often do you get assigned early, particularly early options that are in the money. or again at expiration, etc. What's your experience in this regards? Is it a low probability? Is it a rare occurrence? Thus far, my responses in other forums has been people telling me it's pretty rare. So again, in our options channel, here's that topic. So please respond to that topic. What's your experience? How often have you been assigned options that are in the money, particularly if they're early? That's really what I want to know is what's the probability that an option that's in the money is going to be exercised early. And thus far, I asked ChatGPT that question, and thus far its response has not been very satisfying. So I'm going to have to rephrase my question to see if I can get a more useful response out of ChatGPT, and I'll report back when we get more information about that. So if anyone has any further questions, comments, I will take a look at the comments and see if I missed any. I apologize if I missed your question previously. Please post it again, and I'll try to answer that. Walter Lyons talking about the wheel strategy. Chatted about this a while back. Yep. Yes, actually, Walter, I'm planning and just starting to work on one or more videos about the wheel strategy. So I will be coming out with some videos on the wheel strategy. What is it? How does it work? How can you use it? And we might, test that strategy out to see if that works better. But again, I think one of the premises behind that is, what's the probability you're going to get assigned, right? Because part of being able then to sell covered calls against something that you had a cash secured put against is, did it get assigned? Did you get the actual stock? So you can then turn around and sell the covered calls. If you don't get the stock, then, that's not going to work out. So again, I think this is significant is how often and what are the situations in which we can expect that we're going to be assigned the stock and therefore can plan accordingly. Okay, does anybody else in the chat have any further questions? If not, you can always tag us in our Discord. Again, you can find our Discord's free to join. You can find an invite in the description box below. We also have our Facebook group. You can ask us questions there. Also via any of our social media sites. You can find links to all our social media sites on our homepage, beachbumtrading.com, bum without the U. Again, here's all our sites. There's an invite to our Discord, the Facebook group, etc. Also links to all the trading platforms, tools we use, additional business resources, reference links, etc. So again, quick and easy place to find all the various links that I use, and therefore that's why I put them there. It makes it easier, quick and easy for me to get at any of that information. So, okay, if there aren't any further questions right now, again, you can always, put them in the comments below this video in our Discord, etc. I'll try to respond as we're able. Please, tag me in the Discord so I know to look at your question. Again, we'll try to respond as soon as we're able. And we hope you all come back for part 2 of our weekly trading game plan tomorrow, same bat time, same bat channel, 10 a.m. Eastern time. And we'll take all of this market analysis information, all these trading strategies, and we'll select our individual stocks, individual ETFs that we're going to put on our various watch lists for the trading week of January 9th through January 13th. So thank you again for watching. Thank you again for joining us in the live chat, and we'll see you all tomorrow. And again, we'll pick our individual stocks for our top swing trading watch list for the trading week of January 9th through January 13th. And you all have a great rest of your Saturday. Talk to you tomorrow. Bye.